Good day and welcome back to another week of Talking Technical. And this week we've got some nice charts to show you. But first of all, apologies. We did a recording just before the long weekend, and it is my mistake. I forgot to put it onto YouTube. So I think that recording was almost a little late because it almost came with Christelle's one. But sorry, my apologies. But let's see if we can run through a lot of charts today, and hopefully we can make you happy. So that if we look at these charts, first of all is Ripple. I mean, Ripple is also a cryptocurrency unit, and a lot of people like it, and everybody's into Bitcoin and some of the other names. And someone asked, France, I would like to buy um, Ripple. Now, I'm a little bit nervous because what I'm looking here is I'm looking at this chart. This chart is running from October 2022, 23, sorry. And I look at this chart and I see probably a double top. Can it be that this is maybe a double top in the making? I mean, everybody is just so keen on currencies or cryptocurrencies at the moment, but I'm a little bit nervous because this double top makes me nervous. But look what we're seeing here. We are seeing here a head and shoulder formation. Now, I just want to bring that line a little bit up there. There you can see. There's the support line or the neckline. Well, there you are. There's the left shoulder. There's the head. There's the right shoulder. And maybe we're working on another one. But look what we see here. We're busy consolidating below the 50-day moving average. That is negative. So if you want to buy Ripple, I will say rather wait to see if this right shoulder disappears. But below this 50-day moving average, I'll be very nervous. And my neckline here is sitting at 0.56. Now, below 0.56, Ripple can maybe surprise you and go much lower because my target of this head and shoulder formation, let's just do the full target because I know that cryptocurrencies are so volatile, they can surprise you in one day to go up 3 or 5%, and the other day they can fall. Now, my target of this head and shoulder formation is sitting at zero point 0.5. So it can easily lose quite a bit here. But where's my stop loss if you do want to short sell it? By the way, I'm always nervous to actually trade in cryptocurrencies. I've never traded myself, but I know people that is trading it. They say be very careful with your stop losses because what you sometimes see is you will have an idea about the chart, but then you get these kind of ugly candles that we're seeing here. Just have a look at this candle. This candle, the low of the day was 0.45. The high of that day was 0.63. And I mean, it opened up at 0.45 and it closed at 0.58. That just shows you, I mean, the spread, let's say from 0.45 all the way up to 0.68, and that in one day is massive. So be very careful on your stop losses. But if you do short it and you short it at the neckline, make use of a stop loss of 0.61 to protect your capital, and hopefully it can go back to 0.50. I also hear that some of the CEOs of these cryptocurrencies say that they believe that in 2025, massive capital inflows will take these units much, much higher. So I don't know, but as always, just be a little bit careful. Remember, cryptocurrencies are not for the faint-hearted. They can mess you around. But let's just finish it off. If this target of 0.5 do get reached and we get below this line, there you are, 0.49. Well, let's call it 0.5. You can see this double top to come in play. And I really hope that I'm wrong, because if that double top come in play, where can it take the unit to? Can you imagine? It can take it all the way. Let's just have a look here. Can you believe it? It can take it down to 0.26. So maybe I'm completely wrong, Just be careful, stick to your stop loss. But to buy it at the moment, I'm a little bit nervous. I think we've got two warning formations here. We've got for warning that we trade below the 50-day moving average. Just be a little bit careful. Let's have a look at Kellogg's. Kellogg's, I mean, that's that big company in the world. And you're going to see there's quite a few shares. In America, shares are flying. Look at it. Somebody said it's very interesting that the whole of America, the stock market is flying, but nobody can pay any bond or credit card back. So it's strange. But I mean, Kellogg's, the share price is heading to 2020. It's almost heading to this previous high of, can you believe it, 2104. So for me, lamp ball formation, I think it's too late to buy, and I will use that as my stop loss. If I want to short it, sorry, my entry level on that, if you want to short it, will be 1848. My stop loss will be 2021. And I mean, this share can go much lower. It can go to 1796, 1739, 1676, and even back to this 50-day moving average, almost waiting at 1575. So massive rally. I mean, just in a couple of weeks, I mean, 4 weeks, it goes from 14 to 20. Just show you it has a massive rally behind it. Let's quickly do Netflix before we carry on with some local shares. Netflix, of course, there you are. Beautiful rally. This gap still worries me. I showed it previously. I'm still nervous on this gap. I don't like it. I don't say it's going to close. What I do know is that fundamental gaps do not close easy, but emotional gaps do close easy. Now, this was an announcement of results. That is an emotional gap. It's not a fundamental gap. It's not a dividend or something like that, but momentum to the upside. Where will I get worried? I will only get worried below this line. There you are. I will get worried below 6 Rand on the dot. And if you do want to short it, make use of a stop loss of 638, but only short it when 6 Rand breaks. We've seen now that the American market, it goes down one day and the whole world worries about it. I mean, last week, sometime I think the market fell for 1% and the whole world was mad. I'm just a little bit worried the day that the world say, listen, we've got enough money in the American market. We won't go and seek opportunity somewhere else. And the American market fell or fall out of favor. Then we can see some ugly things. But we're not close there. The American market is the favorite of the world. DRD. Now, I'm showing this share for two reasons. The one is that we called it earlier on a few weeks back, and we showed this falling wedge. There's the falling wedge, and we mentioned it to the guys and said, listen, it's maybe an opportunity. Well, it played out to the T, but just a nice story. And I know it goes against all financial gurus' rules. But I had in my life or my career, I had two guys now doing exactly the same. And what are they doing? They are retiring. And the reason why, what they do is, and it's a very strange method and it's a very dangerous method, because what you can see is, I just want to draw in that line correctly there. What you can see is that you need to have guts. Now, both of them bought DRD. Now, what they do is, when the share starts to fall, they watch it and they watch it and they watch it. And when they see a nice formation like a double bottom or a falling wedge, and they believe that that instrument or gold will actually kick in and take the share much higher, they go in and then they buy bulk of the share. Now, both of these guys, the one guy bought it many years ago and he retired on it. The other one I just greeted today because he says he's going on a long holiday. And what did he do? He bought Durban per deep at around these bottom levels, and he just bought them up and he bought plenty. And what did he do now? He asked me for a level. Where can he sell Durban per deep? I gave him the level. Now, my first warning level will be below this one, and that is 1592. But I mean, if you made a lot of money, you'll probably look at something like 1645 as an exit level. Now, that's why I'm telling you the story. Sometimes everybody loves a diversified portfolio. And there's nothing wrong with a diversified portfolio. It's the safest way to protect your assets. But on the other hand, if you know a share and you like the company and you know the industry or you know something about it, and you go boots and all into that share and you've got the guts and you believe that they cannot go under, and the share does what it's doing here. I mean, it went from 13 Rand to 16 Rand in it. That was a matter of 3 weeks. And I don't know how much you bought it, but it is plenty. So just remember that if you do have a share and you like it, you know the company, you know the industry, and you know that that industry will come into favor and you do it, you can really make a lot of money. So Durban Report Deep, it's just a nice story to give it through to you guys. Let's have a look at Harmony. And I'm worried about Harmony. And the reason why I'm worried about Harmony, the share is doing extremely well and nothing can hold the share back because every day it goes up as the gold price goes up. And every day I read that a lot of people say that gold mining stocks are so cheap that they offer a lot of value. Now, I can tell you now, if you are a fundamental manager and it was the end of February and you're sitting now in the middle of April, and at that point, when the share was 100 Rand, let's call it 110 Rand, and at that point, you believe that the share offered value, and you still buy it a month later or 6 weeks later, and the share is at 167 Rand, then you don't need to be a fundamental manager because then you don't know your job. So the bottom line is, yes, it is maybe very overvalued. Undervalued, sorry. But I'm worried about this kind of lamp-pole formation now. I've seen a lamp-pole formation over years. When it does that, eventually it will do this. It will come back. And where's the warning signal? My first warning signal will be below that candle. Maybe we're seeing a reversal now in the making, but below that level, and that will be 161 Rand and 46 cents. And what worries me is there's a gap and there's a gap. And I can bet you a dollar when this company falls out of favor or gold falls out of favor, and I'm a big gold bull, I love gold. The share can easily come back to 100 Rand or 120 Rand or at least close this gap. So don't buy at the end of the cycle. I always like that one saying that Mr. McCurry said once on TV, Wayne McCurry, and he said, you know, when you buy a share, like let's say you buy platinum or you buy a gold share for that matter, and the share is rock bottom and fall off the charts, and you believe that you in that share and you still buy, and you even if you're out of money and you believe that that company can turn around, right at the bottom is sometimes the place not to short sell or just give up because usually right at the bottom the share starts to go up. Now it's exactly the same way. When a share goes up right to the top, don't be stupid and buy it right at the top. Yes, it can maybe go another 8% or 10%, but when it turns around here, this lamp formation will trigger some selling. And maybe, but maybe you just bought a lot there and then suddenly you burn your fingers. Because why? And remember, I'm not a fundamental analyst. Harmony Gold Mine has got deep mines, old infrastructure, and a difficult workforce. I know they agreed on a 5-year agreement now on labor issues, but that can change within 6 months. We all know that. So just be a little bit careful. But at the moment, this company prints money because the gold is doing well, their product is flying, and I like it, but I'm nervous. Just right down that little level. Maybe I'm right. We'll see maybe in a few weeks from now. Let's have a look at Lewis stores. Well, if you look at this 40, 50-day moving average here, I don't like the shooting star here right at the top. It's trying to fight its way back, but I'm a little bit nervous and I'm going to use this trend line, and I'm just going to warn that below this trend line, this support line, this company Lewis can really go much lower, and the level there is 43.22. If you want to short sell it, my stop loss is a little bit big, 43.22 to 46.14, but where's my targets? 42.80, 42.20, maybe all the way down to 41.47, And I hope it doesn't close this gap. Where's this gap? There's the gap. Let's quickly draw it in before the time catches up with us. And there you are. The gap is between 40 Rand and 30 cents. And the high of that gap is 39.95. Let's hope it doesn't close it, but I don't like the shooting star. I don't like the test of this trend line. Just be a little bit nervous. As always, thank you so much for watching the show. Visit our website www.fransdeklerk.com for more info. And as usually, we'll chat again.